The Federal Reserve just cut rates. So why on earth did mortgage rates go up? More on that in a minute. Hey everybody, Joe Hillner with Your Home Sold Guaranteed Realty. And here's what's happening now. Most people assume that when the Federal Reserve cuts rates, mortgage rates should drop too. But here's a twist. The bond market is really the one calling the shots. It moves much faster than the Fed, and it's been ahead of the game for months. In fact, mortgage rates have been following the bond market's lead since the 1970s, not the Fed's. So what happened here? Simple. The bond market already knew the Fed was going to cut rates, and it had already priced that in. Now let's dive into why that matters. First things first, the bond market is like that friend who's always 10 steps ahead. While the Fed might seem like the big player, the bond market was already moving months ago in anticipation of multiple rate cuts, not just one. So when the Fed finally made its announcement, the bond market yawned and said, been there, done that. Mortgage rates had already been dropping for a while. But here's where it gets interesting. Right before the Fed even made its announcement, something big happened. Housing starts, basically the number of new homes being built, beat expectations. That strong economic signal caused bond yields to jump, and guess what? Mortgage rates followed suit. Let's talk about those housing starts. They came in hotter than anyone expected. That's a sign the economy might not be slowing down as much as we thought. And when the economy looks stronger, bond yields go up. Why? Because investors start thinking, hey, maybe we don't need lower rates after all. So even though mortgage rates had been dropping, thanks to the bond market's preemptive moves, this new data sent them climbing again. It's like the bond market saying, hold up, maybe things aren't as bad as we thought. Next up, the labor market. Jobless claims came in better than expected. Another sign that things aren't slowing down as fast as some had predicted. And when the labor market looks strong, it adds even more pressure on bond yields. So just like with housing starts, bond yields rise when the economy shows signs of strength. And again, mortgage rates follow right behind. Basically, the bond market doesn't wait for the Fed. It reacts in real time to whatever economic data is coming out. So while the Fed was trying to ease things up, the bond market was already thinking way ahead. It's like the Fed was still deciding on the next move while the bond market was already playing the end game. So where do we go from here? For mortgage rates to come back down, we'll need three things to happen. Lenders need to lower their risk premiums, making mortgages cheaper. A risk premium is essentially the profit the lender will make when they sell the loan, and they sell most of their loans. The economy, especially housing and labor, needs to slow down a bit. And the Fed, well, they'll need to get a little more aggressive with those rate cuts if they want to really push mortgage rates lower. Until we see those things happening, mortgage rates are likely to hang out where they are, or maybe even tick up a bit more. The bond market, as usual, will stay a few steps ahead of the Fed, watching every piece of economic data like a hawk. So if you're wondering why mortgage rates didn't fall after the Fed cut rates, just remember, it's all about the bond market. It's ahead of the Fed, and right now the data is still showing strength in the economy. Till that changes, don't expect mortgage rates to drop just because the Fed says so. Local Real Estate Market Watch. First, single-family homes. This past week, 62 new listings. That's okay. Ranging in price from $425K to $24.5 million. 31 different properties under contract and 18 going pending. Another bad week. And a worse week with 41 homes sold ranging from $470K to $6.5 million. Let's look at condos and townhomes. 91 new listings, $105,000 to $7.95 million. And a terrible week for contracts. 17 under contract and 29 going pending. The worst week ever. 29 closed sales this week. That's a new low and ranging in price from $108K to $5.1 million.
If you are thinking of selling your home and would like multiple cash offers in just minutes, it's easy. All you do is click below, enter your address in the search bar, and receive multiple cash offers almost instantly. There's no obligation or hassle. Simply make more money selling your home and receive top dollar quickly. Discover the great cash offers waiting for you in your home in just minutes. It's as easy as 1, 2, 3. Click below, enter your address, and start packing.
Okay, that's it for today. Thank you for watching, and stay tuned for more updates on the ever-evolving housing market. If you'd like some specific market data on your neighborhood, just send me a text or give us a call at 954-799-6867. And if you're watching this on my YouTube channel and you do like the information, don't forget to hit the like and subscribe buttons and the notifications icon, the bell down below. So until next time, this is Joe Hillner with Your Home Sold Guaranteed Realty, signing off for now. Go serve big, everybody. Be nice to each other. I'll see you next week.